making the group a very, very valuable and a very strong group. The first and foremost, considering the critical COVID, we went into a big reform stage. And I say very clearly that from 2020 to 2022, it was a reform stage. When we reformed big way in the company, we took out the 400 crore fixed cost. We brought our working capital from 110, 115 days. We put the businesses on a growth. Then second phase was 2022 to 2024, which was a perform stage. And that period, if you look at it, for the past 12 quarters, the company Raymond Limited has demonstrated significant growth in revenue, EBITDA, profitability, became a net debt free, and initiated some of the great corporate initiatives, which enabled the first thing, we sold the FMCG business, we became a complete debt free with a 1500 crore cash. Then we announced the demerger of the lifestyle business last year, which is getting completed. Actually all the possibilities are done. Now we are going to list on day after tomorrow. And then, is this better? Okay. Then what we are doing now, in July we did the real estate demerger, which will take also 12 to 14 months. And at that point of time, let's say next year, around October, November of next year, we would have the real estate business. And that is what we are calling upon. Now is the journey of a transform. So the journey of 7 years had 3 phases, which was reform, perform, and now we are moving into the transformation stage. And that is where you will see a significant growth across our businesses. As you all know that we have got 3 large businesses. One, the lifestyle, which will get listed on day after tomorrow. The second, the real estate business, which started from a Thane land, is getting expanded beyond Thane, getting into JDA and such things. And the third thing is the engineering. With the acquisition of Mining Precision, we forayed into sunrise sector of aerospace defense. So overall, as a group, we have seen a significant change, and we have also seen a significant value unlocking. And we believe continuously, in order to give a pure play businesses to the investors, because you all know conglomerates carry a large discount, and pure play businesses, by virtue of a demerger, truly unlocks the value. And that is the journey which we are on, and we have demonstrated exactly that, how a value can be unlocked. Now, I will ask Sunil, and we have also done very importantly, created very, very strong boards and the professional management team to run each of the businesses. So therefore, if you see on the Raymond Lifestyle, we have got a 9-member board, of which 7 are independent and all big marquee names like Vineet Nair of HCL, and Krishna Narasimha Murthy of NSC, Bennett Coleman, ex-CEO, and so on and so forth, GC Chaturvedi, ex-chairman ICICI Bank. So like that we have brought, and the professional management team. So I think that is also very, very important. At the same breath, then your business is performing well. You are also doing the right thing in terms of software aspect, in terms of governance, and so on and so forth. With that, I would like to call upon Sunil Kataria, who is the CEO of the lifestyle business, to talk more about the lifestyle business, the Raymond Lifestyle Limited. And then we are expecting also Mr. Singhania, the chairman of the group, also to come and address, and then we'll take the Q&A. Thank you.
Thank you, Amit. A very warm welcome to all of you from media. And there's a great moment for us that we are on the verge of listing Raymond Lifestyle Limited as a separate entity day after tomorrow. And what I'll do is I'll quickly take you through a presentation on how we see the journey of Raymond Lifestyle Limited from here onwards. As Amit mentioned that till over the last 4 or 5 years we've been into a major transformation. We did some corrections, then we get into a growth path, and now when we get into a pure play consumer-centric lifestyle company, how we see our growth pivots and what are our aspirations and what kind of journey that we see from here. So first and foremost, I think one of the biggest news which has happened recently that we all know about Raymond being a 100-year young brand that we have remained relevant across generations. I think we couldn't have got a better, support or in terms of what we stand for, other than this brand finance study which happens globally in 100 countries across 6,000 brands, and then publish the list for each country. In the brand finance India list, Raymond has made it to the top 10 iconic brands of the country this year. And if you see the kind of brand names which are there, and we make it the top 10, it's clearly a proof of the strength of this brand and what it means to Indian consumers. Now, one big thing which I want to point out, a very sharp thing, that in this chart, quickly, that what Raymond Lifestyle Limited offers as it becomes a separate listed entity is a very unique play across 4 verticals which no single company gives in the lifestyle space. If you see, if we look at maybe our largest ethnic wear company in this in the country today, they're just pure play ethnic wear. If we look at a B2B garment exporter, there are quite a few of them, but they are just a B2B garment exporters. If we look at apparel players, the largest apparel player in the country would be primarily into ethnic wear, ready-to-wear, and let's say formal and casuals apparel player. Similarly, any other textile player you see would be only branded fabric or branded textile as we call it. We are well placed that we have 4 different verticals within the Raymond Lifestyle Limited. We have ethnic wear brand, Ethnics by Raymond, that we've rolled up. We have branded apparels with 4 brands of Park Avenue, Barks, Color Plus, and Raymond Ready to Wear across formals and casuals. We obviously, as core, are the dominant branded fabric player in the country. And lastly, we have a very, very highly skilled, unique, differentiated, vertically integrated garment export business operating out of Bangalore. So this gives us a huge amount of leeway in terms of if there can be some sectoral ups and downs in one of these sectors, we are well placed to be across the verticals. Now, how the Raymond Lifestyle Limited is structured, we have B2C businesses and we have B2B businesses. This is roughly around 65% of our business, that's around 35% of our business. Within B2C, we have the core branded textile and then the branded apparel. And then the garmenting business that I talked of, that's B2B. And then we also have domestic B2B business also where we supply cotton to local apparel manufacturers. As Amit mentioned, very clearly, we are very focused on creating a lighthouse corporate governance structure. And with this company becoming separately listed, we have a month back created a high pedigree, truly professional board which will be a lighthouse board in terms of corporate governance. You can see some of the names here. Mr. Murthy, Vineet Nair, Anisha, the brand expert, Mr. Vignan needs no introduction, Mr. Mahendra Joshi, Mr. Ravi Dhaliwal, who's been the ex-group CEO of Benetton Coleman, Mr. Dinesh Lah, who actually is from shipping and logistic industry and has been the CEO of Maersk, Mr. Chaturvedi, who's retired just recently as the chairman of ICICI, Mr. Rajiv Sharma, who joined as a boss last week. He is currently the global CEO of Sportsvilla, just retiring from there. And then, if you see this board of 10 odd people, the one very unique feature which you won't see in most of the companies, very few companies in India, is that the ratio of independent directors versus promoter director, or let's say non-independent directors. Actually, you see 80% of this 10 people boards are completely independent directors with a very high pedigree. I am a professional director who comes on board, and Mr. Singhania is the promoter director. So there is 80% people who are completely independent. Very rarely do you see this kind of configuration in any board across, and that really tells the proof the pudding of what kind of high value that you're placing on being very professionally run organization at a board level. Another thing that we've done along with this is that we have made sure that all subcommittees of our board are going to have only independent directors. So neither Mr. Singhania or not me would be there on any of the subcommittees. So this is my management team of lifestyle. As we said, there are multiple businesses. So this first 6 people of the team is the people who run the businesses. It's a SBU structure where each person is responsible for the P&L of the business. So we have apparel, suiting, garmenting, ethnics, shirting and home, 6 CBOs or chief business officers, supported by CXO structure which runs common across. So Sameer, who's recently joined us as a Chief Financial Officer, also from GCPL, and then we have digital, we have Chief Marketing Officers, HR, CIO, and a Chief Manufacturing Excellence Officer. So the structure is very well balanced in terms of running P&Ls and then supporting with CXOs with common capabilities, supporting each business. And this team is also pretty, come together in an age band of roughly around 2 years is the age of the team into the company. And we have a pretty good mix of people who have got experience from these relevant categories and businesses. Our strategy is broadly three, simple. At a 30,000 feet level, I have to say, this is one slide which describes the 30,000 feet overview of our strategy. We have our core business, which is branded textiles, the branded fabrics. We want to strengthen the foot. We see there's really a headroom to have growth in this business while increasing the EBITDA margins. Two very disruptive, high double-digit growth businesses for us. One is apparel, one is garmenting, which we're calling as growth businesses, extend the growth. And then we have looked at our overall strategy saying, okay, if you're going to be a truly complete man ensemble organization, you want to be a complete men's and fashion lifestyle company, what is that we are not serving the Indian man in their lifestyle space? Then we identified three areas which are very, very important. One is ethnic wear, which we have already rolled out. The other is a very exciting opportunity of sleepwear, which I'll talk of, and then innerwear. And these are three new vectors of growth which we have rolled out, and one is we're just rolling out, which will become multiplier of growth vectors. They are not going to be, percentage growth, they are multiplier growth vectors for us in the future. So clearly, strengthen core, accelerate growth, and build the new. Now, this is a very unique perspective on the Raymond lifestyle business and Raymond brand in the lifestyle space. There is no wedding in India which has been complete without a Raymond set being gifted or a Raymond suit being worn by the groom or the groom's relatives or the friends. Everybody ends up having a Raymond into the wedding, and that's the way Indian weddings have always been. So we are a dominant wedding player brand, and let's look at some numbers. India does roughly around 80 lakhs to a crore weddings every year, which the published data tells us the market size of humongous Indian fat wedding market is 11 lakh crores, 1100,000 crores. Obviously, it's sub-kharcha. It's everything: food, banquets, flowers, hotels, everything is there in this. Gold obviously is there in this. Now, if we see 23% of this is spent on clothing. Again, all kinds of clothing, both genders we're talking about, and kids as well. So then 23% becomes clothing, which is around 250,000 crores market. Now, if you further break up this clothing, then between men's and women children, 1/3 is roughly 30% is men's clothing wedding wear, which is roughly 75,000 odd crores. This market, obviously, in India being a country of vast diversity, is still a largely unbranded market. People use a lot of unbranded ethnic wear. There's a lot of unbranded shirting must be happening. A lot of locally stitched garments happen. So this is a large unbranded market. But we are the market leader in this brand, and this is how the shares look like. We hold 5% share of this humongous 75,000 crores. First of all, 5% may look small, but that tells you the kind of headroom of growth we have, or any brand has. But the important piece to say is we are 2.5 times the next player in the market. And this obviously we're talking about the branded opportunity. You can see 90% market is still no brands out there. But this is what we are. That we are India's largest and by far dominant wedding men's wear brand in the country. And this is where our aspiration is over the next 3 years to grow this share to around 6 to 7%. And that's where one of the pillars of strategy is geared towards. This is a business snapshot. If you start from this, last year we ended up around 6,700 odd crore revenue as a business. And within that, one half was our branded fabric business, the branded textile business. Now, if you see, 55% of our branded textile business is indexed to weddings. That means the purchase is happening linked to wedding demand, and they get into wedding consumption. 1/4 of our branded apparel business is again linked to weddings consumption. Now, if you put these two together, what this tells us is 1/3 to 40% of our total revenue is a wedding index, and that number translates into that 5% share of the total dominant wedding market in India. We have business dominance. Apart from this, obviously, I told you we have a revenue, we have a B2B business of garmenting and a B2B domestic business. Now, what we are looking forward, as we told you, that as we go towards the 6 to 7% share, what we're looking at is where we are today in this 35% share of ours, which is roughly around 2,400 odd crores of our business, that becoming 1.5 times in 3 years' time, and then obviously becoming 2.3 times in 5 years' time, or 6 years' time. Now that is the kind of journey that we see in our dominance of wedding demand. Why should we be able to do it? We are very clearly a brand which has the biggest right to win and continue to dominate the wedding wear market. First of all, quality, craftsmanship, fabric, apparels, you name it, everything is the biggest brand equity this brand has. You've seen the slide of being in the top 10 brands. Even otherwise, we know that the consumers relate to us in a very, at a core emotional level. Second, our product range is very diverse. In branded fabric, we have products which start at 300 rupees a meter and go up to 300,000 rupees a meter. Our core of our belly of our product also lies between 500 to 2,000 rupees a meter. So we have a product and a collection for every consumer and every wedding in India. What is your buying power? We have the product for that. Secondly, we have introduced something very new segment within our fabric businesses, ceremonial fabrics. We are seeing as ceremonial ethnic wear is becoming bigger, it's not becoming bigger only in ready-to-wear. It is also becoming bigger in ready-to-stitch market, where the many people sizes don't fit comfortably in ready-to-wear ethnic wear. They say, okay, I want to get a sherwani stitched. I want to get a bandhgala stitched. And that market is also becoming very big in India. So we have started participating by launching ceremonial fabric. So you stitch suit from us. Now we give you all kinds of ethnic fabrics to stitch. Whatever ethnic way you want, you get it done. You want bandi, you want a bandhgala, you want a sherwani, you want Indo-Western, please do it from our fabric. And then lastly is a foray into ethnics by Raymond, which is a ready-to-wear ethnic brand. That again is a third offering that we have. So between all kinds of fabric, all kinds of ceremonial fabric, and then ready-to-wear ethnic, we have a complete portfolio of wedding menswear. We have the largest distribution network in the country. Our 1,050 plus Raymond stores reach 666 cities in the country. That's a massive reach which nobody can replicate easily, and we're very unique in that case. We also have a very large wholesale network which throughputs our branded fabrics, and also a multi-brand network which throughputs our branded apparels as well. And lastly, in ethnic wear, now we're doing a very strategic expansion of our EBO business. We are affiliated around 120 stores. We are looking at ramping up over 3 times. And lastly, in each of these TRS, we have something called Raymond Custom Tailoring, which all of you will have experienced at some time or other. Like I always say, you buy fabric, but you don't consume fabric. You consume garment. But that's a very unique piece of our business, that our fabric bana to look with. पहली चीज तो हमारे fabric बनाना ही stuff, right? If somebody has that fabric, how do you convert it to garment? Where people don't buy thong, they buy thongs, but they don't wear thongs. They wear either a shirt or a trouser or a jacket or whatever, and that comes through the skill of tailoring, and that's where Raymond Custom Tailoring comes in, which is a very unique moat that we built. We have a huge network of tailors in every franchisee store, trained by us, monitored by us, invested by us, obviously by franchise store owned by them, where you can do any kind of customization. So in a wedding wear, you're looking at customization. You want your bandi to look different, you want your sherwani to look different, you want your ceremonial suit style to be different. All that can happen in here. And then obviously in our ethnic store, we have created a very immersive, unique experience. And if you go to our store, you will experience that. These are 4 very fundamental reasons why we will continue to succeed and maybe become more dominant in our wedding wear segment. Now, another unique piece of our piece is the strategic expansion of our exclusive branded stores. Now, one thing which again is a skill that we mastered over the years is very clearly the piece of running Raymond stores. With 1,000 stores, franchisees, partner stores, by and large. Now we know how to run retail stores across 600 plus cities in the country. So we are now going to ramp up our stores from 1,500 to roughly around 2,200 of stores. So basically 700, 650. Actually, this is a number which I'm a little being cautious about. But actually we're looking at much bigger than that, maybe in the range of 800 odd members. Yes, the store which is open. Now quickly, pivots of branded textile. We have 20,000 SKUs present across 800 plus cities, 1,000 TRS, 1,400 multi-brand outlets, which throughput, and I already talked about any fabric that we have one for every home in India. What are we going to do in the branded? What are the growth pivots for branded fabric? Clearly, in suiting business, now branded fabric business two parts, suiting and shirting. We demarcate the two. In suiting business, we are market leaders by far. We hold around 50% plus market share of suiting business. We are going to do category premiumization. We are seeing India is becoming richer, people have more money to spend, more aspirational. They are moving up the ladder in terms of the quality and the price points of fabric. And that is where we're investing behind product what we call as exotic collections, a new Italian collection called Regio Italia, high wool rich wool blends, where high fashion comes in and very high fine fabrics come into play. This is premiumizing from mass premium to luxury. And this is going to be a core of our branded fabric suiting strategy. So we are going to develop this top end of the market. And then obviously we're going to back it up with the distribution initiatives. In a shirting business, there's a different opportunity. While we're sitting on 50% shares in suiting, in shirting, it's a much more fragmented market in the country. We have moved over the last couple of years from around 30% shares to maybe around 20% share, with huge headroom to grow shares there. And there the strategy is very clear, two purports. One, the same premiumization happens in shirting as well, through linen and top and cotton. We launched a lot of new digital prints. We invested in digital printing machines in our factories, and that's driving the top end of the cotton. But there's a big play that we see of making market share at the mass end of the market, where we have been missing till now, which is the volume growth happens through value cotton at the mass end of the market. This will help us increase shares. So our dual strategy plays out in shirting. So as a combination of this, high growth in the cotton business led by volume gains as well as premiumization, and shirting, huge gain happening to development of premium category. Coming to our branded apparel business, which is a growth business for us. 4 brands we have: Raymond Ready to Wear, Color Plus, Pathway Parks. And then we have 3 new brands, which we're talking about, Ethnics by Raymond, Sleeps by Raymond, and Pathway Wear. New categories, but the core existing brands are 4. Again, we are in 600 plus cities. We have between all these brands 400 plus EBOs already. We sell through 4,100 multi-brand outlet counters, and we sell through 1,400 live large format store counters. But there's a huge headroom for us to grow this. The clear focus areas are: we are going to scale up our distribution. We are rolling out a new retail identity. We have revamped each brand's brand identity. Each brand design language has now been differentiated. Which is going to be a formal brand, Parking is going to be what brand, I'm going to talk about that. And then I think this is a business which we have underserved by not investing enough in marketing and distribution growth. And those are going to be 2 levers that we're pressing right now. So if you see the playbook very clearly, establish RR as a ready-made premium fashion wear brand led more by formals, but also we're going to bring in little things of casualization. But it will be a formal ready-to-wear brand which Raymond Fabric stands for, and we are going to ramp up distribution in a big way. We have 100 odd stores of Raymond ready-to-wear. We're going to take it to 2.5 times the 3 years. So we'll have around 250 odd stores of Raymond ready-to-wear. Park Avenue is going to be a hybrid brand. This is a very youthful brand where we're going to create a hybrid presence, where you will have formals, but you will have a lot of casualization that you see. We'll launch a lot of performance products in this. New fabric like FlexTex, which is a stretchable fabric, a fabric called Fearless, where you end up spilling something on your shirt. You just coffee or juice, you just rub it off, nothing happens to the fabric. We're calling this Fearless Whites, Fearless Blacks, and then FlexTex performance fabrics. So this is a very youthful hybrid wear that happens. Now, maybe one thing I'm going to do, along with this, both in Park Avenue and Color Plus, we are refreshing the look of the store. Our stores have been a little jaded in the past. Obviously, for the last 7 years, we've not done enough maybe on this. Now we are rolling out in line with this new brand identity and new look of the stores. And this is a new store which has come out in Jaipur recently. All future Park Avenue stores will look like this youthful, Park Avenue inspired, casual, hybrid, formal kind Plus, we're making it relevant for the millennials. A refresh has happened there. There's a little bit of positive time to maybe I'll skip the video of the Color Plus right now. Paths is a brand which is value for money. This is all aimed at youngsters. And this we sell through multi-brand outlets. Again, defined very well as a fully casual brand. These are quickly the new parts of our business, the new multiplier growth factors. So let me talk about ethnics first. We have created a 120 store footprint within a matter of 18 months. Very unique, differentiated designs. People look for hutke design. Everybody wants a unique look. We've been able to create premium fabrics, premium designs, and a very differentiated design language. I want to show you definitely one piece here. At very, very affordable pricing and a very, very immersive premium store. What I want to show is the insight that we've captured to build this brand. The insight on which this brand is built is because wedding moment is a celebration not for one person. It is a celebration of the family. That's why this 5-day Indian wedding happens. Friends, family, everybody gets together and they want to dress up and look good together. That's a core insight of Indian wedding. So the whole thought here is Saath sajenge to khub jachenge. And if you see in this advertising which has become a big hit, we are investing more money behind this in the coming season. We not only showcase our store, ethnics as a Raymond store destination with our collections and this whole emotional thought content. That's the whole thought of the brand. If you see the whole feel of the vibe of the brand is so different. So this is what we created, and we're going to expand these stores from 120 odd stores now to 3 times, up to 350 to 400 stores. And with this kind of brand. So this is what it is, 350 plus stores at 27. Now coming to the big foray that we're doing, sleepwear. We give Indian men anything they start the day with: shirts, trousers, jackets, suits, jeans, casual wear, ethnic wear. So when they go to sleep, we don't give them anything. So we said, okay, Indian wear, either pajamas, kurtas, dhotis, or they wear lounge wear, so just boxer shorts, etc. So when you get into it now, this is getting into essentials. This is interesting. From by and large discretionary categories, we're getting into essentials. But we're completing the men's look. Now, यहाँ पे जो लोगों को चाहिए, this is less of fashion, more lifestyle. That's why we said we want to do fashion and lifestyle. Here people are looking for 2 things: comfort. What you need comfort? A good cotton, a comfortable feel in which I can sleep well, and you wanted the right color. So what we have done is, this is the most unbranded part of the country. यहाँ पे local players sleeps के बहुत हैं. Sleepwear, every single city has its own local brand, and the brands sell at anything less than $1,000. 500 की टी-शर्ट हो गई, 900 का टी-शर्ट और ट्रैक पैंट सेट होगा, 900 का कुर्ता पजामा होगा, 500 का कुर्ता होगा. We said, how do you crack this? The best in class quality, but affordable pricing. We have never done democratization of value. While actually in fabric we have 300 meters onwards, but in apparel do we do this? So we said, okay, we will create a product range which will best in class cotton, best in class fabrics, apparel, sleepwear, but sub-3. And we have cracked in a matter of 6 months. So now we are launching, we're just rolling out in this month these kind of products, which will all come from either a 500 rupee t-shirt for sleep in the night, a 500 rupee boxer short, or a 900 rupee set of kurta pajama, obviously. And the intent here is, this market size is anybody's guess, 12,000 crores, 15,000 crores, 20,000 crores, no syndicated studies, but the game is, this is thousands and thousands and thousands of crores. The game here is really to disrupt, simply disrupt with a large national brand with great pricing, great product, and democratize this market. Because Indians want to move from unbranded to branded. And we are doing this through this whole entire pricing strategy I talked about, and we are setting up a separate distribution network, because this doesn't sell through stores. This will sell through those small outlets which today sell hosiery products in India. So we have to reach those outlets. So we are doing a distribution network. We are appointing distributors across the country who then take it to different parts of the each city that we are targeting. Then comes the last foray, as of now the last, but obviously there will be more coming later on, is innerwear. This is a very obvious adjacency for Indian wear. Again, an essential really, if you see. So one sleepwear is essential, then this becomes an essential. This is obviously one where you say, we have, while this market may be crowded, but it's a very obvious adjacency for a complete man's branding. So we're launching this under Park-Eval. And we're extending Park-Eval equity to innerwear at a mass premium pricing. The entire product collection has been reworked with a very differentiated premium fabrics, elastics, designs, everything. And this is getting rolled out in a matter of 3 to 4 months from now. Again, separate team focusing on, we'll leverage our own distribution obviously, but we are also looking at to hit top 25,000 outlets of innerwear in the country over the next 18 months or so. So this then takes us into another foray, sleepwear, ethnic wear, sleepwear, innerwear. We extend 3 more categories for future growth vectors. Coming to the last business part of it, which is the garmenting, which is a B2B business. Now what do we have here? We have the world's 3rd largest suit manufacturer, first of all. We have state-of-the-art capabilities at global standards in terms of designing, in terms of 7,000 machines and 12,000 odd trained workers, which make high-end fabrics from suits to jackets to trousers to shirts for the world's best global brands. We have also got long-standing relationships, and we are one of the unique players in the world which is vertically integrated. We can give you worsted fabric, we can give you polyviscose, we can give you cotton, we can give you linen, and within you give us an order, we'll do your fabric, we will give you ends of garment. So fiber to fashion is what it's called, fiber to fashion. Very few players in the world can do this integration. And that is what strategic global players are now looking for in the last 2 years as part of the China Plus One strategy. This is what has really played out very well. We have gained a whole lot of customers, we have integrated supply chain, and China Plus One has really given us a tailwind, and we have become very, very big for it. Our EBITDA margins have transformed. And if you see now with Bangladesh Plus One playing out, this is another disruptive opportunity on the ground for us. So we are well placed to become the biggest, and we are investing 200 crore capex from 6.6 million to 10 million plus garments in a matter of next 12 months. So quickly, this is a snapshot of financial highlights. We are a very, very healthy company. We see 6,700 crore revenue, gross margin to 46%, or 46%. Any business is a very, very healthy gross margin. It gives you huge amount of leeway to do a lot of initiatives in your P&L and to build brand businesses. 1,100 crore EBITDA is what we delivered. It's a EBITDA which has moved at a very disruptive level in the last 2 years, from 650 odd crores to 1,100 odd crores. Percentage margin is 16%. In 5 years, we've done a margin expansion of 600 bits. And that's the journey. The balance sheet, Amit was mentioning 110 odd days working capital, and number 76, we want to move it to 65 days over a period of time. Controlled inventory days, one of best in class operational ROCE. We have 32% operational ROCE and almost 11% of ROE. Very few companies with such diversified businesses at this scale deliver this. And we are cash rich company, generate your cash surplus to 2%. And this is the broad aspiration that we're having. We'll do a 12 to 15% given all these business pivots, revenue growth, 2x of our EBITDA from now to the next 4 years. We are 1,100 crores, we'd like to double this up, and we will make our NWC come from 75 days to 60-65 days, and we are a surplus cash company. We'll keep on throwing a free cash generation of 600 odd crores over the next 4 years per annum. And that's really the story of Raymond Lifestyle. We list day after tomorrow. It really sets us on a very different transformation path. And with this, I think Mr. Singhania is also here. I would like to just end my deck here and invite him also to share his thoughts with us. So thank you so much, and looking forward to the 5th and a very good milestone. And with this, we'll have our chairman and managing director, Mr. Singhania, joining us now. Thank you.
Good afternoon all. Welcome today to the press conference for the listing of Raymond Lifestyle. Thank you all for coming this afternoon. Day after tomorrow, the listing of the lifestyle business is going to be a very historic day in the history of the Raymond Group. As you are aware, the last 3-year journey for the company, which will now turn 100 years next year, has been a pretty exceptional journey in terms of what we set ourselves out to do. In COVID, the company was faced with all kinds of problems, with no sales, large workforce, high costs, debt, etc. But in the last 3 years, we've really turned this company around, and every single commitment that we made as a company, we have delivered ahead of time. What have we done? We cut our costs substantially. We turned around every business. We brought in a fantastic management team. We turned around all businesses. We delivered 12 quarters of strong performance. We sold the FMCG business. We had committed that by 2025 we'll be debt-free. We became debt-free in 2023. We announced the demerger of the lifestyle business. We announced the demerger of the real estate business. We built a very strong real estate business in the last 5 years. We acquired many engineering and a whole host of other initiatives, etc., that have been done by the company. Where are we today? Last year we announced the demerger of the lifestyle business, and Raymond went ex-lifestyle on the 11th of July. We have a historic day coming up on Thursday when the lifestyle business will list. Most of you know that Raymond has been in the lifestyle business for 99 years, going into the 100th year next week. The lifestyle business is a unique, one-of-a-kind business in the world, and I was asked yesterday by some analyst questions that who is your comparable in this business? Fortunately, unfortunately, there is no comparable. There is no second company like Raymond in the world. We go from fabrics to garments to exports to various categories that the Raymond brand is built under. And we really are taking this company public with the intention of A, creating a world-class company, B, we have put the best-in-class management in place, who I'm sure you have heard today, and we have put a top quality board in place. I'm sure you must have seen the names of the 7 or 8 board members that have joined this company, and I think it's really a commitment on our part and a commitment of all the people and the colleagues who have joined us at this company in our joint endeavor to create a world-class company. So I genuinely believe that the sum of parts valuation of this business will be exponential. You are going to see a company that makes fabrics, garments, apparel, branded apparel, innerwear, sleepwear, ethnic wear, home products, made-to-measures, various categories, all in one. So if I had to go to say, if you compare, we are the largest player in the wedding space today. We are 3 times the size of the next player. If you compare our wedding business to say Manyavar, you compare our garmenting business to Gokul Dash, you compare our innerwear business to Page, you compare our shirting to Arvind, you compare our branded apparel to ADFRL. This company is probably all 5 of them put together in one. And that makes this company extremely unique, because we had the opportunity to give an end-to-end solution to any consumer. And like I said, there is absolutely no other company in the world that can deliver this kind of solution for you. Number 2, this is the only company in the world that goes 3,000 times in price point, 3,500 times in price point under one single brand. We go from 300 rupees a meter to 10 lakh rupees a meter under the same brand. And there's no company in the world that does it. You go from what we say, from the taxi driver to Mr. Tata, everybody wears Raymond. was the only brand where this has been successful. Let me tell you a trivia which is very interesting. When Toyota was being sold in the US, everybody thought that Toyota was a very cheap product. And the board at Toyota came up with a brand called Lexus. And it's exactly the same car that went to America and it's called Lexus. But does anybody know what Lexus stands for? Huh? Let's export to the US. Lexus became let's export to the US. That's interesting, you know. So, India is the right country, right place. We've got the Bangladesh opportunity to take advantage of. There's the China plus one story. The world is looking at India as manufacturing. So, huge opportunities coming out of Africa. So, having said that, I think is the right company, right place, right time. The India wedding story is very big. We're going to see the second half with unprecedented number of weddings, and we are the largest wedding company today for apparel. We're going to see 1.4 billion people with a 400 million people middle class consumption story unfold. I'm sure you have seen it with other sectors, other companies. You're going to see it happen here. So I think if you look at all of the points I've raised, here's a opportunity for this company to list. Why can't we become the Pidilite of its industry, the Asian Paints of its industry? It's a very unique company with a unique opportunity and with world-class governance put into place. So my objective is to make this a world-class company. I think I have demonstrated it by the quality of the board members that we have put into place, the quality of management that we have put into place. I think you'll have seen the presentation of the management team today. We're really looking forward to the listing on Thursday. At least for me personally, from the time we were dead in COVID and everybody had written us off and said these guys will never come back, never is a word that doesn't exist in my dictionary. Not possible doesn't exist in my dictionary. If you decide you're going to do something, then it will happen. And I'm very, very happy and proud to see this moment of the demerger happening. Next year you will see a real estate demerger happening. And at the core of this, what it is real shareholder value creation. I think Raymond would be the best performer this year, last 2 or 3 years in the mid-cap stocks, if not number one, at least 1 or 2. But we have delivered true shareholder value. And that's what I'm proud of. I think our shareholders are proud of. There's always been a lot of disbelief in Raymond, but this is a new Raymond. Now, people are starting to believe in us. People are believing in what we do. And I'm extremely proud to be associated with Raymond and to be at this watershed time in the history of Raymond. So thank you all for coming. If you have any questions, I'm more than happy to answer them. Yeah, there's a question. Can we have some mics, please?
Mr. Singhania, you have mentioned this Bangladesh opportunity. Could you elaborate how we are planning to leverage, what kind of opportunity exists there and how we are planning to leverage? And secondly, there has been, Mr. Kataria said about more independent directors in your board. When did this come into place and what is the thought process behind
I'll answer both your questions. So, see, Bangladesh is fundamentally a garment manufacturer. It has no fabric capacity. And with the current prices, just so that you understand, fabric went from India to Bangladesh. Now I'm just giving using a number, not the exact number, but you'll understand the principle. If a foreign customer came to India, he came to us and said, give me fabric. And I said my delivery is 30 days. Then it took 10 days to go to Bangladesh and they took 30 days to make it. Today with the crisis, what's happening is Raymond is the only integrated supplier. So we're giving you fabric and garment. So if Raymond had to delay the fabric to send it to Bangladesh, the garment manufacturer is not going to accept responsibility for my delay. He will tell the guy that, I got the fabric late, I still need my 30 days. So my 30 became 40, it became 40 plus 10 plus 30, it became 70. 80 days. Now what happens is you come to me and say, say, I want to integrate a solution, I say I'll give it to you in 60 days. I save 10 days in travel time. Number two, if I have delayed my fabric by 30 to 40 days, I'll make it up in the garmenting because it's in my control, it's my problem. So eventually, the solution that the customer is getting is a better solution from India. Now, the perception has changed against Bangladesh, not for India, but it's changed against Bangladesh. This is the time we're getting massive inquiries. Because people are looking at if they get stuck in Bangladesh for that. Number two, we had invested 200 crore rupees into enhancing capacity last year. That capacity has come online and that is available. So it's been maybe a windfall for us. Coming to the independent board directors, my objective is to make world-class companies, and I don't know if you know, but I'll spell out some of the directors that have joined the board, and they're all absolutely world-class. We've got Ravi Dhariwal, who's the CEO of ex-CEO of Bennett Coleman. We've got Vineet Nair from HCL. We've got Narasimha Murthy, who's on the NSE board. We've got Mr. Chaturvedi, who's the ICICI ex-chairman, who's just retired. We've got Rajesh Sharma, who's the global CEO, current global CEO of Coach Fiera. We've got Anisha Motwani, who's a brand expert. We've got Dinesh Lal, who's the ex-managing director of Mac Shipping. So I think we put together a really top quality board. And idea is to have best-in-class governance, amazingly smart people who can help. So like Vineet and I will help us a lot with digital. Mr. Ravi Dhariwal has a very good idea on business. And you then create, Mr. Narasimha Murthy's gold standard in governance. And today, audit committee is run by Mr. Narasimha Murthy. It runs for the full day. I don't even attend it. I'm not supposed to attend. It's better that way. So, all this, there were questions about governance. We have addressed that. That's the whole idea. And to create a world-class company, I think we're on the right track. I think that answers the question.
If I may supplement this, and this has been the philosophy of the group. If you see our engineering business, Mr. Ravi Uppal has been the chairman for last 4-5 years. Then, when we had the FMCG business, we had Rajiv Bakshi as the chairman of the business, and Mr. Singhania was a board member. So that has been the philosophy. And as he rightly pointed out, that all our committees are represented only by independent members.
So none of our committees, so let me explain to you, the Raymond lifestyle business, I am the only promoter director on the company. Number two, all subcommittees of the board are independent. I don't sit on a single subcommittee. So we have tried to create best-in-class governance, and I'm sure we'll see it play out, and there'll be a value for that. There's a question. Mike, please.
Hi, Mr. Singhania. Can you give me an idea of the capex target over the next 2-3 years, perhaps? Because, as you said,
there's no real capex. We're not putting up manufacturing. There'll be a light capex probably in garmenting, depending on how the markets come. But the capex will be maintenance capex. So nothing of significance. We're not buying any. We're not putting up any new factories, and that's where really capex goes.
Also, one more question about the overall strategy. So, with the rest of the industry going a little premium, perhaps for higher price points, is that something that Raymond Lifestyle is looking at as well? Because there are, I think, 600 ethnic stores that are supposed to go up. So, are you targeting higher price point versus?
Yeah, I told you, we are the only company in the world that goes 3,500 times in price point, from 300 rupees a meter to 10 lakh rupees a meter. No brand in the world can achieve that. And we play in every segment of the society. The guy who buys 300 rupees a meter, as he progresses in life, wants to buy 400 a meter. The guy who buys 10,000 rupees a meter wants to buy 15,000 rupees a meter. So we are playing a whole segment of society. And there is no brand. Today, Toyota had to do Lexus because the car, even though the car is the same, but the brand makes all the difference. Today, Nokia, as much as they did, they had to come out with Vertu. You see, even Taj has Vivanta, you see, there's so many Four Seasons, Ritz, you have a bouquet of brands. Here you have a brand that can go, you see, please understand, you have your legacy business of fabric, and then you can open new verticals, premium apparel, branded apparel, home, shirting. Today you are doing 30 million meters of shirting over the counter. Nowhere in the world does any company sell even half that quantity of fabric that stitches, because we are the largest ecosystem of tailors. Now that.
We just one more question on this. The question: if you see one thing which is happening in Indian wedding, even if somebody earns 3 lakh rupees per annum and somebody earns 30 lakh per annum, when it comes to wedding sherwani, you don't compromise too much on the price.
It's the way you look.
Yeah.
And we've dressed people, I'm sure at least 50% of people in this room probably have worn a Raymond suit.
And on the capex question, we will primarily see, as Mr. Singhania mentioned, I think we have invested 200 crores of capex already in the growth capex, which is gone beyond 500. Now we are just going to have only maintenance capex by and large, because even our store model is the asset-light model run by franchises. So
All the stores that we're planning to open will all be franchise owned, franchise operated. And the target is to open 800 to 900 stores over the next 3 years. Next question? Yes. That's already the process has started for Raymond will be left with the engineering business.
roadmap.
Sorry?
What will be the roadmap of that business?
So the engineering business has got its own roadmap. I think with the Make in India, the opportunities. So we started off with the engineering file business, then we bought Plus auto component. We just merged with Maini in this business. We've got Mr. Maini who's running that business, which is auto component and more up the value chain with Aero. Aero is very specialized and it's very premium. I think with Make in India, there's a huge opportunity. So this is a fantastic company we found that was stuck with COVID, needed somebody to come in and help them. And I think with Make in India, with all the manufacturing incentives that are coming into India, I think there's a huge scope for engineering moving forward.
If I can supplement, so before COVID, this business of engineering, what we had was 600 crores. Now made it to 900, and after this acquisition of mining, it is 1800 crores. And you have to understand one thing, that the aerospace, India exports just 1% of a $100 billion demand. Now, in that we are supplying the engine components, and with that engine components, you have an opportunity to double this business in the next 4 years. And that's a huge opportunity. And it's a very profitable business, because in a $40-50 million aircraft, you won't mind, somebody will not negotiate to the last cent. He will say, okay, if you're making 25% EBITDA margin, I'm happy as long as you give me direct product. The entry is difficult.
Specialized, it's all specialized. You see, we are operating in titanium. Now, why not in the aero of titanium? There's so many other things in the titanium space we can do, which many as a simple company could not do because of whatever restraints they have. But today, as a company today, we have the ability to invest $100 million in manufacturing. It's not a problem. And that will come from the strategy of the engineering business. But today we are focused on the lifestyle demerger.
Meeting, if I can recall our meeting of February 22 at your Thane plant, where we discussed JK Engineering IPO plans. But it is more than 2 years now, it is not yet seen suddenly.
So we've grown the business. Why IPO plan? Even in the COVID, we said we could sell the business. But today the value creation that has been there has been exponential. And we do the IPO when we need the money or when we want to take it public. Today we don't need the money. Today, fortunately, for Raymond Group, the financial balance sheet is super strong. They're a cash surplus company today. We sold that FMCG deal, and I don't think 99% of people understood what an amazing deal that was. Because what that deal did for Godrej and what it did for us, I've done many deals, but I think it was one of the best win-win deals ever done. Because Sudhir Senapati is smiling to the bank, I'm smiling to the bank, Raymond is a different company, Godrej is very happy. What more? I mean, one day when you have a drink with me, I'll explain to you what that deal was. It was a phenomenal deal for both of us. I think there's a question there.
Bangladesh opportunity, any
number to it today, but yeah, there are opportunities.
Since you
Early days.
since you changed the composition of the board significantly, are you thinking about, have you put any thoughts on succession? How Raymond would be going forward? It will be a more fully professionally run company, or what kind of direction will it take?
See, there are three types of companies. Most people there think there are two types of companies: family managed and professional. There are family managed professional companies. I'm not doing anything. I realized, and I've been very candid, in 17, 18, 19, when I left it to advisors, people who didn't have skin in the game, I know what problems will ended up with. Today, I'm going over. I'm hands-on CEO for the group, but I'm a hands-on CEO with full professionalization. So I'm involved as much or as little as I'm required to be, but the buck stops here. There are no advisors, we don't have any advisors. There are people who are responsible, and we created a different kind of organization. And I'm happy to say, from COVID to today, we've completely transformed Raymond. And you're seeing it, you're seeing the results of it, you're seeing the quarter performances, you're seeing everything. So we put in a professional board because I believe that they will add significant value in the value creation journey that I've stepped out on. And that's where I want to go. And God forbid, everybody hopes you all live long, but God forbid something happens to me. There's a competent set of people who can hold the baby, because whilst there's wealth creation for the family, there's wealth creation for millions of shareholders. I have a fiduciary responsibility to all my shareholders, my employees, etc. So these top quality boards will be competent to run the companies that the Gautam Singhania is there on. No more questions? Okay.